Hey everyone, and welcome to High Risk Merchant Accounts 101, brought to you by SoarPay. Today, we're breaking down a fundamental concept in the world of payment processing, the difference between high risk and low risk merchants. If you're running a business and wondering why your payment processing fees are higher or why it was harder to get approved, this episode is for you. Let's start with the basics. A low-risk merchant is typically in a stable industry with predictable chargeback rates, low fraud potential, and consistent monthly volume. Think retail stores, professional services, or standard e-commerce businesses selling low-ticket items. High-risk merchants, on the other hand, operate in industries that carry more potential for chargebacks, regulatory scrutiny, or financial instability. Industries like nutraceuticals, firearms, travel, and subscription-based services often fall into this category. Even if the business is run professionally and ethically, the industry itself can trigger a high-risk label. Now, what does that label actually mean in practice? First, let's talk about fees. High-risk merchants usually pay higher processing rates and monthly account fees. Why? Because the processor is taking on more risk. They need to protect themselves against potential losses from fraud or excessive chargebacks, and those costs are reflected in the pricing. Next, let's look at underwriting. For low-risk merchants, the underwriting process is often quick and automated. You submit a few documents and you're good to go. For high-risk merchants, the underwriting is more intensive. You'll need to provide more documentation, things like financial statements, marketing materials, fulfillment policies, and more. The processor wants to ensure you're a legitimate, compliant business before they take you on. And finally, there's the approval process itself. Low-risk merchants can often get approved in a day or two. High-risk merchants may have to wait longer, and in some cases, they might be declined by traditional processors altogether. That's why it is so important to work with a provider that specializes in high-risk industries, that understand your business and know how to get you approved. At the end of the day, knowing whether your business is considered high risk helps you set realistic expectations, find the right provider, and avoid costly surprises. Want to learn more about high-risk payment processing? Subscribe for more insights and check out SoarPay for solutions tailored to your business needs. See you next time.